The Reserve Bank of India has announced a 50,000 crore rupee borrowing window for banks to lend to mutual funds. Why now? The RBI swung into action to cushion mutual funds from likely redemption pressure in the context of the panic created by the abrupt closure of Franklin Templeton funds. So, what exactly is the RBI offering? The RBI has opened a special liquidity facility for mutual funds of 50,000 crore rupees. Under this, the RBI will conduct repo operations of 90 days tenure at a fixed repo rate of 4.4%. Is this a good deal for banks? Yes. Well, funds availed under this window can be used by banks exclusively for meeting the liquidity requirements of mutual funds by extending loans and undertaking outright purchase of investment-grade corporate bonds, commercial papers, debentures, and certificates of deposits held by mutual funds, as per the RBI. The scheme makes sense for banks as they can borrow at 4.4% from the RBI and lend at 2 to 2.5% margin. Well, this isn't the first time the RBI is helping mutual funds industry. What did RBI do in 2008 and 9? In 2008, in the aftermath of the global financial crisis, the RBI had stepped in to save the sector. The central bank then opened a special window to provide banks with funds to support mutual funds. The RBI then cut the amount of funds banks must keep in reserve, releasing more than $12 billion into the banking system, injecting $13 billion via its daily overnight money market operations, and introduced a temporary funding window for mutual funds. Will this time the window help mutual funds? Well, that depends on how much funds banks borrow and on lend to mutual funds. What else did the RBI say? Under this, liquidity support availed would be eligible to be classified as held to maturity even in excess of 25% of the total investment permitted to be included in the HTM portfolio. This will mean banks don't have to fear about treasury losses on this portfolio. Exposures under this facility will not be reckoned under the large exposure framework as per the RBI. Further, banks don't need to worry about additional priority sector lending burden since the funds borrowed under this window will not be reckoned for computation of priority sector targets or sub-targets. Also, this will be exempted from the bank's capital market exposure limits as per the RBI.
It is rare to get information that is tailor-made for you. In this era of clutter, Moneycontrol, India's #1 financial destination, has launched Moneycontrol Pro, an ad-free premium service that offers you subscribers curated markets data, exclusive trading recommendations, and actionable investment ideas, which help you stay on top of your game. In less than a year, Moneycontrol Pro has become India's fastest growing subscription service with more than 1.2 lakh active subscribers and growing by the minute. We are grateful to all our loyal users for making Moneycontrol Pro an undisputed leader in its category, with several corporate giants subscribing in large numbers for their employees. Subscribe today for a seamless, uninterrupted access to a gamut of business and financial information. Be a pro with Moneycontrol Pro.